Welcome back to the show. We've got a very special one today, a bit outside of my usual, but we've got myself and a whole bunch of agents in Toronto, in God's country. We're here to talk about a roundtable discussion on what everyone's seeing in, Toronto housing market, national housing market, thoughts, interest rates, mortgage rates, the good, the bad, the ugly. So we're going to get into that. And then obviously we will chat a little bit about what we're seeing just in the real estate profession, an industry that is looked down upon negatively, and which we're all here trying to rectify and actually provide a lot more transparency. So let's get into the show though. Tom, you're the ringleader here. How are you finding the Toronto market these days?
I mean, it's obviously way different than it was. I think the best analogy I heard about the market these days, it's like, if you were driving 120 miles per hour and then you got stuck in traffic and it was 60 miles per hour, that's kind of what the market feels like now. Like, it feels like nothing's happening because it's half the speed as before. Things are still happening. It's just they're taking 4 times longer than before. And, daily conversations with buyers is like, who wants to be the buyer that buys if the market keeps going down, right? Like, no one wants to be that person. That's a tough situation to be in. And with the seller, it's like, even if you price your property perfectly, make it look amazing, and do all the things you're supposed to do, it can still maybe not sell or take 5, 6, 7 times longer than what we are used to. And, for, I think, all of our markets here, right? Steve, you're in Vancouver, Toronto. It's like we've been basically spoiled for the last 5 years if you were selling a property. And now I think we're coming back down to reality. And like, these interest rate increases have certainly had the impact I think the Bank of Canada was looking for. And it sounds like they're going to keep going, right?
Yeah, I think we're saying the same thing here. Like, I've been surprised. I don't know if you guys are seeing this, but I've been surprised about like the resiliency of like maybe the homeowner or the market so far, in terms of like, we've seen these price declines. We've seen obviously very, very weak sales, but I've just been surprised about like the number of people being like, I'm going to pull my listing from the market, or I don't want to sell. I'm going to wait till like the spring market. I'm kind of like, well, I don't know if the spring's going to be any better. Like, I wish I shared your optimism, Mr. Homeowner, but like, I've just been surprised. Like, we've seen 20-year lows in new listings in Vancouver and Toronto. I don't know if you guys have what the daily conversation is looking like. Like, Nazim, I know you have a lot of, conversations with all your clients and stuff. Like, what does that look like? Are you encouraging them to like, hey, let's get it on? Is it just sit it out for a couple more years? Like, what does that look like?
Almost discouraging them. Excuse me. It's it's one of those things. Is exactly what Tom described. The rates are going to continue to climb, so it's hard to tell people, yeah, like, jump in. There's people that actually reach out and they're saying, I'm really tempted, I want to move, I want to buy a home, I am looking at these prices, they're very attractive, and they are, right, more than before. There's less competition on them, but what's killing them is just the rates and the unknown of like how much longer these rates going to continue to climb. And also the question of, do they lock in at fixed now at like whatever, 5%, 6%, or do they, because is this going to be lasting 5 years, 3 years, or do they stick with variable and ride it out? Okay, but how long are we riding it out, right? So yeah, it's just like Tom said, everything's taking, I would say 10 times longer. Listings are barely selling, and so what those listings are doing, they're saying, hey, I want to lease it out instead. So we're not really seeing desperate sellers. We're just seeing people who are deferring. Like I tweeted that also, like, people are just deferring. They want to buy, but they're waiting, right? They want to invest, but they're waiting. They want to sell, but they're waiting, right? Because everybody believes that the market is going to somehow miraculously jump back. People don't think that the rates are going to be 1% again. But they do believe that at some point they're going to stop increasing, and eventually it's going to come down. Like, come on, you guys, you have to admit the government's not going to let the real estate market collapse. It's like our one Canadian resource. Is it not?
We just got a lot more negative comments in the YouTube after that. Thanks a lot, Nazma.
but but that's the way it is. I mean, I'm not, condoning it, but I mean, I just feel like the government's not going to allow it to reach to that level. And at some point they are going to take a break from increasing the rates.
Yeah, no, I mean, it definitely becomes like a solvency risk, for the banks and for the government as well. So, I mean, you think about the largest tax revenue generator, it's definitely a function of the housing market, right? The housing construction that spins off that, the consumption of furniture sales, et cetera, et cetera. So it's definitely very, I mean, yeah, someone was talking about, I'm not the biggest Benjamin Tal fan at CIBC, but his comments of the mortgage industry's conference this week was basically that he, in his view, and I mean, I'm sure he's a numbers guy that's crunched a few numbers, that the Canada is twice as interest rate sensitive as the US. And so I know everyone's like, Canada, we've got to follow the US, and we certainly are at this point. But yeah, we're, if his comments are correct, that we're twice as sensitive, it's going to be a hard break pretty quick. And I think we're obviously seeing that on the front lines of the housing market. Miranda, I don't know if you have any sort of comments there, and Jordan, obviously on the pre-sale side, because you're front and center of seeing projects hitting the pause button. So when you have like massive condo development projects being paused, that's it's a huge drag.
Yeah, I mean, I'll say in the short term, who knows, right? Like the assignment market's an absolute bloodbath. And for those that aren't familiar, assignment is, you buy a pre-construction condo 5-6 years ago, maybe life changed and you don't want to close on it, or maybe you never intended to close on it. You were always planning on 100, 200, whatever, 100,000 in profit. And so you were never actually going to close on that property. Problem is that market right now is, first of all, it's an inefficient market because those generally can't be listed on MLS, right? So they get traded on literally through WhatsApp groups, through Facebook groups. Some of them make their way to Kijiji and even Craigslist, right? And so they're very hard units to move. So they already trade at a discount versus comparable resale units. And there's an endless supply of them right now. It doesn't matter what project's coming up on closing, you can find 10, 20, 30 different units that you can buy, from the original purchasers. However, I will say over the long term, over the 5-10 year horizon, I'm actually more bullish than I've ever been. And the reason for that is because the increased interest costs also affect the bottom line, the pro formas for developers. So it makes it more expensive to build. You add that with the cost of construction rising 29% for high rise in the last 2 years in Canada, plus inclusionary zoning, which is this new thing in Toronto that's coming out in January that says 5 to 10% of every building has to be affordable housing, right? So that means instantly pre-construction builders have to bump their prices $125 a foot. And then this year we just voted and we passed a 49% increase in development charges, meaning development charges in Toronto are the highest, and it's not even close, out of any major metro in North America. And so you look at these numbers and you go, well, it's getting harder to build. This year, we were supposed to see 35,000 condos launch across the GTA. We saw 10,000 of them get shelved. Meanwhile, we're expecting to see 550,000 new residents in Toronto from 2021 to 2025. So immigration, all-time high, building as unprofitable as it's ever been, and developers shelving projects because the numbers don't work right now. And reduced investor demand, because a big part of the pre-sale market, 70, 80%, is investors buying these things. Usually they close on them, hold them for a few years before they sell them. And over time, building demographic changes from being 70, 30 investor homeowner. And over time, it kind of it normalizes. So you rely on that investor demand to get these projects started, to get your construction loan and hit your sales targets. And they're not interested right now, right? Because the pre-construction prices are up here, resale prices are here, and all the uncertainty in the interest rate. So over the 5-10 year horizon, all I see is housing supply contract, immigration expand, but I think the next few years in particular is obviously going to be really, really tough.
I think the one argument, the YouTube comments are going to be swirling here. I mean, I totally agree with you. Like we're seeing the same thing in Vancouver, which is, projects are being shelved. Again, it's a profit business, right? Like the risk reward, the reality is for people that maybe don't know or aren't familiar with it, is like for most projects, you typically have to pre-sell 65% of the building in order to obtain construction financing. And in BC, we the law is that we have 12 months. Developer has 12 months to hit those targets. And so for a developer to launch a marketing campaign, a sales campaign, build out a sales center, if they feel they can't hit 60% of their sales in a 12-month period at the numbers that they need to hit them at, then like there's no point in like launching and spending millions of dollars on a failed launch. So most developers will just hit pause and they'll wait for the market to basically recover and conditions to get better. So what happens is you end up like years down the road, not in a year, not 2 years from now, but 3, 4, 5, 6, 7 years from now, you run into these supply sort of constraints or shortages because the projects that were shelved in 2022 would have been completions in 2025, 2026, 2027. So that's kind of something to keep in mind. Naz, I'm kind of curious your thoughts on the rental side. Like, are you guys seeing rents, and this kind of maybe ties into the whole inflation conversation? The rental market's always been crazy. You talked about homeowners offering to pull their listings off the market, just rent it out. Are you finding, like, we had a huge run up in rents? Are you finding like that rents are now, like, have they stabilized? Are they peaking out? Are they in your opinion, are they still going up? Or do you find we're hitting a bit of a ceiling here?
Yeah, that's a good question. In summer, it was just on steroids. It was just, there's no end in sight as to how high the rents are going to go, because people were just willingly bidding higher and higher. Like, they would come in on day one and offer more than list price, sometimes sight unseen, 12 months up front, like, just ridiculous, right? We would see that a few times, like in the past years, we've seen that, but not to this level. Now, since like September, it has slowed a little bit, but not to what rentals used to be. Like, if you had like a house rental, they could sit on for a month on the market. You know what I mean? Now it's not like what it was in summer, but it's still very active. Like, we have multiple showings every day or every week. And really, it sometimes, like, this is another thing, some listings might be sitting on the market, but it's not necessarily because it's not leasing or the price is wrong. A lot of times because the landlord is very specific about who they want to move into the house. And so they're getting offers, but they just keep declining the offers, right? But yeah, so like, this is what I see, is that there's a lot of listings that keep coming on the market, which otherwise probably would have been for sale, but now they're for lease. Despite the fact that we have more lease listings than I think we've had in past years, the demand is caught up with it. It's not like we have more supply than demand. So we have like again, that's another reason, is because we even have clients coming to us saying, I live with family, or it's the end of my lease, or, I'm thinking of moving out because the space too small. I'm between buying or renting. And so then they start, they're waiting. We look at buy, we look at rent. In the end, they choose rentals. Even if rentals are sky high, they're choosing to rent because of the uncertainty in their mind. It's like, okay, that's going to give me 1 year, where next year, hopefully by the end of my lease, the market will be better. Like, the rates are going to be stabilized. Prices are going to be maybe bottomed out, and I'm going to buy. And you know what? If that happens 2, 3, 4 months before the end of my lease, let that be a loss. I can move out. I can keep paying the landlord 4 extra months, 4 times 2K, let's say a 2K a month. Who cares? Consider that a loss, but I'm gaining the price decline, right? So yeah, there's a lot of tenants out there, more than usual.
Yeah, no, it makes sense. I think I found it interesting because, like, I know like a lot of the conversation is right now, again, it's around interest rates, mortgage rates, where are they going to settle out, how much they're going to keep going up. It's really hard to make, your largest financial decision in an environment where rates have basically literally gone from 0 to, 3.5%, in 6 months. And so what I found interesting is if you look at what's happening in the US, 3 of the largest residential REITs, real estate investment trusts in the US, have come out and said in their public statements that they're seeing rents basically had peaked out in the summer. And in some communities, in some major cities, they're actually now seeing month over month declines in some of the rents. So, but when you're talking about like the whole inflation story, like the whole idea behind when is inflation going to sort of peak or roll over and sort of stabilize a bit, that a lot of that is going to matter about shelter inflation and the rental market. So that's why I was kind of curious of like what you're seeing there of like, yeah, we've seen a huge double digit run up in say Toronto, Vancouver rents, but you know, you can't grow rents by 10, 15% every single year. At some point there is a limit.
I think I'll answer a little bit more to your question if I wasn't clear, but yeah, it's like you said, prices now are not what they were in summer, in the set, not what they were. They're not increasing like they were in summer. So now you're trying to target what another house or another condo was getting in summer. You're likely not going to beat that price right now. And like you said, you might even get a little bit less, like $50, $100 less maybe. But typically, you know this very well, as you get closer to December, there's way less demand and people don't want to move in winter. And so rents usually, I mean, the price declines a little bit. It'll be interesting to see the stats when they come out.
Yeah, no, that's exactly what it was. What's everyone else seeing on the investor side? Like, feel free to chime in here, obviously, but like investor clients, you know, buying, selling. The only reason I'm curious is I've had a few calls, you know, not a ton. It's certainly, I think it gets played up in the media, but I've definitely had a few calls for sure about people reaching out, clients and whatnot of that have several properties and floated them on variable rate mortgages, not fixed variables, but like Scotia floating rates. And, you know, now under constraint of, okay, I was, you know, breaking even on these couple condos and now I'm losing, you know, $300-400 on each one. It's, you can sustain it for 3, 4, 5, 6 months, 12 months, but at some point, I think it becomes unsustainable. I don't know what you guys are hearing or seeing on your day to day.
It seems like people are waiting. Like they're just what you said, they know that it's not sustainable and they're kind of holding on hopes for it to get better. And just, you know, seeing what happens. But I think it's going to come to a point where it's not going to be feasible if it keeps going too long.
That's a good point. So my question then is, we talk about, you know, I see Jordan's in the big time on the Financial Post there. Talking about the pre-sale doom, right? But like, so Miranda, you talked about like, you know, investors holding on. Jordan's like, yeah, like the assignment market's kind of a mess. Do you guys feel, I mean, it definitely depends on maybe the rate of the direction of mortgage rates over the next 12 months, but like, do you feel that there's like the pain or more of the issues that have been talked about around, like, you know, these mixed gating funds and assignments and investors trying to hold on? Do you feel like this is building up into this crescendo into sort of middle of 2023, end of 2023? Like, when do some of these risks like really start to like pop up?
Nazma, you had posted about someone at the bank talking about the trigger rate and saying that a lot of people have called and can no longer afford it. So I haven't had that conversation with my clients yet. Like, no one's told me that. Are you hearing that? Because that could be the thing, right? That brings more inventory to the market.
Okay, I'll make a note of that. Thanks for bringing that up. Because, okay, this is what happens usually. They get called by the bank or whatever. They get a letter and, you know, the trigger rate thing. And they see that, like all my payments are going towards interest all of a sudden, right? And, you know, some of them, their payments have increased because, you know, whatever, variable and it's adjusted. Some of them are, and also they're looking at further more like increased rates. And so that's going to go out. Then what that means is that now they have an additional loan to their mortgage, right? If that's what the route they choose, if they don't want to increase their payments. The point is that kind of the idea that, I own my home and I'm paying off my home. Now they're not paying off their home. They're basically like paying interest, full interest. So it's hard for people to wrap their head around this, especially in our cities like Toronto, Vancouver, where your house is supposed to make you money, right? That's the whole idea. And so what's happening is their first reaction, of course, is, oh my gosh, like I'm going to have to sell this, right? That's their first reaction. And that's what, you know, my friend told me. But what usually happens is that, like, just like when you hate your job, or, your relationship is, you can't take it anymore. You don't just say, I don't want this, and you're done with it in that instant. It starts to build. It starts like, oh, what do I do? Should I sell? Should I not? So these people are just debating and kind of struggling with the idea of sell. They don't want to sell, but it just kind of like lingers on. They don't make the decision immediately where they're like, okay, I'm selling, and then tomorrow we have like fire sales. That's not what really happens, right? The first reaction of shock, at that point, they're like, oh my God, like, am I gonna have to sell this? This is too much. I can't afford this. And people are gonna blurt out, I can't afford it. Of course, they don't want to afford it. They don't want, and especially when, some people are like, oh, but what about the stress test? Okay, the stress test, I mean, we didn't account for everything else to be more expensive now, right? So yeah, some people don't, I mean, they're tight. It's tight for cash, right? So anyway, so I think, and it's just like what Steve said, which is, I think by next year, I think maybe by spring even, or summer. By the way, it's funny you said that, 300, 400 out of pocket. Investors in Toronto are used to that. We're used to cash flow negative. Okay, like that's what you get when you buy an investment in Toronto, right? You're cash flow negative. But now, I mean, maybe they're looking at 500 more. Like now it's maybe 1,000 out of pocket. But again, you have to kind of remember that investors in Toronto have a very strong mentality that this is temporary. We're going to ride it out, and the real estate market is going to come like roaring back. So why should I sell now and lose money? It's just like, when stocks go down, what are you going to do? I mean, are you going to just sell everything off? You're going to wait until it comes back up. But anyway, that's in terms of selling. So a lot of them are just trying to hold on and just bleed money. In terms of buying, I mean, this very well. It just, the numbers don't even make sense to jump in right now. But a lot of people are calling saying, hey, like, if you find a good deal, if you find someone desperate, let me know. Or, I want to start keeping an eye out and see what happens, what we see maybe in the next few months. I want to jump in and buy something. So that's what investors are thinking right now.
What I was thinking when you were saying that is that pretty much for all of us talking to clients in Toronto, Vancouver, it's like you're not really buying for cash flow if you're buying investment property for a condo, right? It's like those days were gone. You can manufacture it by putting 40, 50% down, but that's not really the whole point, right? It's like you're buying for appreciation, but we don't know how long it's going to take for appreciation to be a thing again, right? So even for the investors looking at it, going at the rents right now, it's like, yeah, the rents are really good, but for how long are these rents going to stay the same? So it's so hard right now to have any type of opinion on the market because things are literally changing. Like, when rates probably go up again in the next week, it's going to change things again. And then who knows? Steve, I'd love your opinion on this. So I had been told, and maybe this isn't 100% true, but that Bank of Canada has never raised the rates in December. Do you think this year they're like, screw it, we're going to do it? I don't care that it's the holidays. We're going to do it.
I mean, I've been so wrong on rates this year that I'm, taking it on the chin. But I just think like, the whole thesis was like, listen, yeah, you guys can raise rates as much as you want, but like you're going to break things. And we're already seeing things obviously breaking. It's just, it's all bubbling to the surface. So yeah, I don't know. I still think I'm of the view that they should have been raising rates well before. Like they literally started the single first rate hike was literally 1 month after the housing market peaked. That's when they started raising rates. So like, they're not really like forward looking. And I think that, again, I look at a lot of the inflation data. I think it's lagging. I think that these rate hikes haven't actually even filtered through. Like we're talking about right now, like we're saying all these things on the show, which is like, hey guys, listen, this is what's happening in the assignment market. This is what's happening in the private lenders. This is what's happening in the investors. And a lot of this hasn't actually filtered through to the housing market. Yeah, you're seeing the odd sign where there's a couple of people that are panicking, just saying, okay, quickly get it on right now. But Miranda said, you got a lot of people that are like holding on and like hoping. Like hope isn't really a strategy, but that's what people are doing. And so I just still think like a lot of this hasn't actually filtered through into like the actual economy. So I think the Bank of Canada is like backwards looking. So for them to like do the right thing, I don't know if they're going to get it right. I think they're going to get it wrong again.
I think it goes outside of housing first. Like if what Nazma was saying, when people are kind of tightening the purse strings, they're going to just stop making those luxury purchases first and the vacation purchases that are, more expensive than they would be spending when they have the money. they'll just stop with those first. And isn't that the idea of reducing inflation, is making those luxury prices come down a bit, and those wants versus needs, the spending going lower on those is what I would think. But
that's a perfect like segue, because I think like one of the things that is interesting is like in the real estate space particularly, right? Like we're like the leading indicators. Like, we've enjoyed a massive bull market over the last couple of years. I think a lot of realtors are maybe not, God bless them, maybe not the smartest financially a lot of the times. Bull market, you get the new Range Rover, you get a couple pre-sale condos, and like all of a sudden volumes drop to 20-year lows. Like, I think that there's going to be quite a bit of pain. We've got a lot of realtors in Vancouver. I know the GTA is infamous for having more realtors than teachers.
Like 1% of the population.
Yeah, 1% of the population. Yeah, a little more actually. Something like if out of every 80 people in Toronto, one's a realtor.
Right. So what's your guys' opinion on like moving forward? Like, are you guys officially I don't know if anyone's even tracking that, but are you guys seeing anyone yet? Or is it, again, too soon, too early in terms of people actually leaving the industry?
I think it's
one of my it's kind of a fun story. One of my accountants, who has his hands in a lot of different businesses. He and does a lot of accounting for realtors specifically. He specializes, or at least his firm does. A number of people at his firm specialize in realtors. And he said a lot of realtors who got into it sort of during COVID or pre-COVID, who did really well for a couple of years there, are asking him for jobs now.
To be accountants?
No, just he has his hands in a lot of different other businesses. And so he's got a lot of admin roles and stuff. And just in general, looking for, looking like they were either part-time realtors prior to COVID and then went full-time through COVID, or they've been part-time through all of COVID. And like, they just, a lot of people parking their licenses. I think you'll still see license renewals because it's not that expensive to keep your license, right? So you just renew and you'll keep your license. But as far, I think you'll see, like, in a bullish market, I think the real estate market is like any other business where 20% of realtors do 80% of the business. But I think in a bearish market, what we're heading into, where things are really tough, I think people really turn to experts and people they trust, right? And so that 80-20 rule becomes more like the 90-10.
Yeah, I mean, that's a really, I think the one thing I will say is, like, I always find it interesting is, like, when you get like new like realtors in the business, the one thing I always tell them is, like, the first couple years are always the most challenging, because if you think about real estate, it tends to be a very long sales cycle, right? Like, you don't just meet somebody at very, very rarely do you meet someone at a coffee shop, you grab a coffee with them, and they're buying a property within 3 or 4 weeks. Like, a lot of times it's like you meet for coffee, you have an initial conversation, you're nurturing that individual, for 6 months, 7 months, 8 months, until they eventually buy a property. And then that property doesn't close for another 2 months. Like, the time you meet them to the time you get like a paycheck, you could be talking 12 months, right? So it takes a long time to build up the relationships, to have like sort of a sales funnel where people are sort of transacting.
A few of us on this call run real estate teams, and I'm legitimately getting a realtor a day that is a solo agent reaching out to me saying, am I expanding my team? Because I think a lot of agents that did okay last year are now thinking like, oh, this is actually really difficult. And I had looked at it because I presented to a group of realtors at the end of March. And I said, put up your hand if you had your best year ever in the last 2 years. And the room like shot up. I'm like, yeah, no shit, right? Like, of course you did, right? I said, keep it up if you think you're going to have the best year ever in 2022. And this was earlier in the year, right? Right before things were changing. And a lot of people kept their hand up. I'm like, all right, confident group. 2021 in most market, I'm sure Toronto and Vancouver numbers are pretty similar in terms of percentages. There was like 25% more opportunities last year. The pie was just bigger. And this year we're actually down more than we were up the year before. So now there's 30% less opportunities than there was compared to last year. And I think people are starting to wonder what's going on. And now they're looking at other people saying, can you save me? Can I join your team and you can save me? And then on top of this, like, hearing the rumors of how many people signed up for the real estate program in the last 2 years because of the craziness are they now going to say like, maybe not? I don't know. We'll see.
I was actually thinking the same thing, which is, we had a record number of people signing up last year to be realtors because of, like we all know this because of all the money and everything. But now it's quite the opposite. Now I think people would be very scared to make this their career at this point. And I think that I know that there are some agents who have went back either to their last job or that have gotten a part-time job. So, I mean, I don't blame them because it's a fear of the unknown and it's a fear of where's the next paycheck going to come from. So
someone made the joke, I don't know who it was on Twitter or something, but like talking about all the labor shortages in the service sector will be filled by all these realtors.
Realtors make great servers and hospitality. Like it's very similar industries.
Yeah.
I think you do get like a lot of realtors though that are in like the service, like in the hospitality sector, right? Like a lot of like part-time servers, bartenders, and they'll get their like real estate license on the side and then like try to make a go of it, right?
I think they make the best realtors because it's all about client service, right?
Yeah,
some of the best realtors.
I mean, yeah, definitely being like personable and like, understanding people, I think is definitely like a huge component of the business.
Mm-hmm.
I think also like the client experience side of things, like, the stat we all get told is like what 20% of realtors make it out of the first 2 years, right? You always hear that. But the one I hadn't heard that someone told me is only 13% make it to 5 years. So for the typical Canadian consumer, you are working with someone that is a tourist in our industry. I never heard it put that way. They're not sticking around. So the experience you got was with someone that was probably in that 87%. That's not going to make it to year 5. And I just never heard it said that way. And I was like, oh, wow, that's actually really interesting way to put it, because you think about the reputation that we have and, our clients seem to really like us, but then you go online and it's like totally the opposite. And I think that's what it is that a lot of people's experience with us was with a tourist, someone that didn't stick around because they can't cut it when the market's not going up.
Or somebody who sold them on the idea of buying 4 pre-construction condos, even though they could only realistically afford to close on one.
Jordan, you throwing yourself under the bus?
Yeah, no, but I will tell you, man, like you were asking earlier about when are we going to start to see fire sales? I think you already are in the assignment market. It's just that they don't make it to MLS, right? So I will say, like, most of my clients who are listing assignment sales, like, they can afford to close if they need to, but I'm getting calls from people who are panicked, who have, 2, 3, or 4 of these things. And realistically, they only really have the income to support a mortgage on one. And so they can't close, right? And when you can't close on the property, suddenly you're like, hey, just sell it for what I paid. I'll absorb the commissions and the legal fees, and I'll take a 5-6% hit on this thing, right? But I think one thing a lot of realtors forget is like, and I think this is why you're seeing so many go part-time or whatever, or reach out to teams like us who have leads, is because when times are really, really good and everybody's buying homes left, right, and center, business kind of just, or at least some business, just falls into your lap by nature of you having a network of friends and family and being a realtor that's available to those people, right? But when it's not like that, which is most markets, you need a consistent stream of leads. And a lot of these people haven't solved for that part of the business, right? You have to remember that, yes, like at the bare minimum, you have to be good at your job and you have to service your clients appropriately, right? That's the bare minimum for this industry. But in order to do really well, you have to generate a steady stream of leads. Like, I don't think there's been a year in the last 5 or 6 years that I haven't generated more than 10,000 leads a year. And for me, like, that's, market goes up, market goes down, that's fine, as long as there's a steady supply of inbound business, because people forget, right? People still buy and sell in down markets. People have life events, things change. But you need to have that inbound business consistently in order to do well in this business, just like any other business, right? The reason that the failure rate in small business is so close to the failure rate in real estate is because people don't realize you're not a salesperson. You're a salesperson, a CEO, a CMO, you're your finance guy, you're everything rolled into one.
Yeah, no, I think that's a good point. I mean, that's kind of like hot market, you host an open house, you get 35 groups through, you can probably pick 2 of them up that are unrepresented and go sell them across the street into something else. So it's like, pretty easy. But then when the market slows and you have an open house and there's, 2 people that come through for the entire 2 hours, it's pretty hard for deals just to fall in your lap. So, part of the show is actually we are launching a real estate course. I think we can all agree that the housing market is in the dumps. I think it's going to be I think regardless of rates, yeah, sure, they might come down a bit. But I think over the next 6 to 12 months, it's going to be a challenging housing market. And who knows, maybe it persists longer than that. We don't know. But so we wanted to kind of put something together because, everyone's probably looking at this going, look at all these young people. What do they know? But to Tom's point, right? Like the industry is changing. And so we wanted to put together a course where ultimately we want to improve the industry, right? I think we're all advocates for, we understand that the industry has a negative reputation. There's a lot of bad actors. I think we can all agree that licensing requirements are way too easy. We're seeing that CBC mortgage fraud documentary come out. It's embarrassing, right? So hopefully we can sort of be proponents of improving the industry, actually giving people modern day training, not only about educating on the housing market and understanding all the intricacies that are involved in it, but also how to help people generate their business and actually survive and get through this. And so, for those that are interested, there will be a link in the description below. So we'll be releasing that very, very shortly. But just to kind of give you a quick, we're missing Daniel Foch. Anyways, everybody knows him probably from Twitter, but so he's not here. He's locked away in the boonies somewhere without any internet. But we do have basically a whole host here of top producers. So I keep busy here in Vancouver. I don't need to pump my own tires, but Jordan, runs precondo.ca, which is one of the largest pre-construction websites in the GTA. Tom producer, Miranda does extremely well. What do you I heard several 100,000 followers on TikTok. It's something insane like that. And Nazma, who I'm sure you guys are well aware of, is also a killer in the industry. So we've got a whole host here of I think a star-studded lineup. I don't know if you guys want to chime in and add anything, but
I think it's a cool platform because it's everyone here has built their businesses in very unique ways, right? None of us have copied the formula from the other we're all very I'm organic SEO and paid media, Facebook leads, you know what I mean? We have content creators like Tom does a ton of YouTube, a ton of team building. Miranda is obviously a killer on TikTok. I tried TikTok. I couldn't survive on that platform. Those comments ate me alive. I think that's what's unique about the course is everyone here has done it we've all kind of gotten to the same destination, but different ways.
I think it's cool too. It's if someone asks you, if you get the same question several times, it's probably a reason. That's probably the reason a lot of us started making videos in the first place, is just to answer a question we kept getting, right? And what I found, especially now when the market slowed down a little bit, and from running other courses to realtors in the past, is people just need the formula to go do it. And I think a lot of people are fed up with the raw, get you excited and teach you nothing, which, exists in our industry. It's you leave an event and you're I'm going to go take over the world. And then the next day you're wait, what did they talk about? Where I think for us, it's we're not going to teach you theory. These are going to be practical things that you can do. But the truth is also this isn't the magic pill. How to be successful in real estate is doing really boring things day after day after day and having structure. And that's what you're going to have to do. But at least I think we can build the framework. And the big thing is with everything is consistency. And that's why on top of getting access to all the courses, which we will continue to add to, is you're going to have access to a VIP Facebook group. And we're going to do monthly calls just for this group. And we can each come in and do a topic or have on guest speakers. And I think that's truly where a ton of the value is as well, is this small group. And if any of you watching are in other real estate Facebook groups, they're not great places to be. We're going to keep this one as one that you actually got to pay to get into, that you want to be a part of, because people are actually sharing things, not just wasting our time.
Very well said.
Yeah, I think some of the smartest people in Canadian real estate will have a whole bunch of people in there as well. But it'll be a lot of similar conversations like we had today, right? Which is hey, listen, let's chat about the market. Let's figure out what's going on. How do we give proper advice to our clients, right? How do we, I'm getting a lot of conversations of okay, do I roll into a fixed rate? Do I lock in today at, a 5-year fixed rate at 14-year highs interest rates? So how do you have those conversations? How do you really unpack, a client's financial situation situation because every client is different. So it's just really just like putting the whole picture together. I don't know if it was Jordan or Tom talking about it earlier, but I think that people ultimately in these down markets actually tend to seek out, individuals that have been around the block that really can cut their teeth. They know what they're talking about. Cause like, when we're dealing with people's like largest financial asset, like I always made the joke, like, when I sort of got in the industry and it was like very like stats focused, and trying to like educate people what was happening in the market. I always found it interesting because especially in a bull market, right? People will go out and just hire like their random buddy that got their license like 3 weeks ago, and they'll go out there and make $1 million financial decision. They'll buy $1 million property, and they won't even really ask any questions about, who their realtor is and what they do and what their experience is. Like, now imagine if you took $1 million and you threw it into the stock market, or if you were to go hire a portfolio manager, you'd probably ask for a whole bunch of reviews. You'd ask them what their strategy is. Like, you wouldn't just willy-nilly just throw $1 million at, some random portfolio guy that you met at an open house. Like, so I always found that interesting about the industry. And like I said, I mean, part of that is because the barrier to entry is too low, but I think really is creating a whole bunch of smart agents that can improve our industry as a whole. I think it really, not only benefits the industry, but benefits the public.
I have this Instagram account with all agents. It's about like 900 plus agents. I would say the biggest pain point, even for seasoned agents, whatever type of agent, is lead generation. And I think that's what people struggle with the most. Even if they're getting some sort of like consistent, even if it's consistent, they plateau, right? And everybody wants to improve and grow. And like Jordan said, I think this is great because everybody has reached success in a different way. For example, paid ads versus organic social media, for example. And I think that everybody, who will get onto this course or this little group will learn something, and they can figure out what it is that they want to do or what do they want to focus on. And like you said, it's a good support system for experienced agents versus people who are coaches who are not really in the industry, who are not dealing with clients day to day. I think we all know coaches like that. For me, it's just like whenever I see coaches, I'm just like, what's the most business that you've done? How are you going to coach me into, like, maybe if it's mindset, it's different, or, controlling your schedule, whatever it is. But in terms of getting business and working business, I don't know that I would want a coach who is not really working in the industry and trading like we are.
Actually, well, that's a great point. So when I got into the industry, obviously you're always trying to like learn as much as you can. I spent so much time on like following, all the quote unquote gurus and stuff, but it was interesting because a lot of them like weren't actually successful in like the realtor profession, but they were selling sort of, real estate coaching. And then the other thing I found was like a lot of it was like US based. And I find that US markets or US lead generation is very different. I think a part of it is culture. I find that US sales is very much more in your face, whereas Canadians are very laid back people. So like the art of, selling or whatever you want to call it to Canadians versus Americans is actually much, much different. And so I haven't really found any great sort of maybe Canadian real estate trainers, coaches. That's kind of my thoughts.
And also one more thing I'll say, wherever there's demand, you want to supply it, right? I know that Tom and I, and probably Jordan too, we get a lot of questions from agents, like constantly, where, oh, can we have a call? Can you teach me this? Can you teach me that? Can you show me this? Can you show, what are we going to do? We're going to spend like all day long helping, this is one of those things where we see that there's demand for it. And we think that we could be helping a lot of people by creating, sitting down, investing time into creating a course that will actually kind of address a lot of questions that we usually get, right? That their questions will be answered in those videos versus us having like individual calls with so many people.
Yeah, it's a brilliant way to wrap it up here. So, thanks everyone here for taking the time. Like I said, hopefully that was entertaining, educational, all at the same time. But if there's any interest, obviously feel free to reach out to any one of us, Twitter DMs, Instagram, whatever. But there will be more in the YouTube description here covering that. And so, looking forward to obviously answering everyone's questions. And that's about it. So
Thanks for having me, Steve. Finally, on your channel. You're popular.
Won't be the last. You earned a callback.
Bye,
Thank
That was
guys.
you.
fun. Thanks, everybody.